Hi, in this video, you will learn the step-by-step process you need to take to get approved for a home mortgage loan. Hi everyone, I am Lisa Barrientos, mortgage loan specialist with Elite Financing Group with over 20 years of mortgage experience. I love sharing my knowledge with everyone in order to make educated decisions and be prepared to follow the mortgage loan process. Now, let's go step by step on how someone would go about getting approved for a mortgage loan. Shopping for a home may be exciting and fun, but serious home buyers, based on our credit market and our current market, need to start the process with a mortgage loan specialist, not an open house. Most sellers expect buyers to have a pre-approval letter and are more open to negotiating with those that prove they have financing. So step 1, pre-approval is your first step and doesn't take much time. They involve completing a loan application and pulling a 3-bureau credit report called a tri-merge that shows your credit score and credit history. Your lender will ask for your photo ID, most recent 30 days pay stubs, W-2s, and tax returns in order to pinpoint a loan amount for which you qualify. You'll be glad you have the pre-approval. It saves you time and you will be able to focus exclusively on houses in your price range. Your realtor will love you. During your pre-approval phase, one of the best things to do is to gather up documents needed. Your mortgage loan specialist will provide a list of additional documents needed for the loan process and for your underwriter approval. Anything you can do to prepare in advance will reduce the stress when you find your right home. These will include bank statements for the account with liquid assets for your down payment, insurance, agent information, and other documents based on your loan application. This will also include a 2-year income and employment history with contact information and positions held, additional income documents based on your application, letters to explain inquiries or other items pertaining to your loan application, and other documents based on the type of loan you choose. Your mortgage loan specialist will discuss the loan amount you qualify for and what your budget allows. You should be able to just hand over all paperwork to your mortgage loan specialist to ensure a smooth process. Step 2. The mortgage loan specialist will send you initial disclosures, which will include the loan estimate for your review. They will also ask you for the additional documents we discussed in step 1. The loan estimate discloses closing costs, the interest rate, and monthly payments. Depending when you plan to purchase, the interest rate will be floating or locked. A floating rate means your rate could fluctuate based on the market. A locked rate is good for 30 to 60 days and will remain the same rate within your locked term, but may involve lock extension fees if you do not close within the locked term. Your mortgage loan specialist will help guide you. Your loan estimate is simply a statement of terms and estimated fees. Think of it as a car repair estimate. You're just getting a sense of the work that will be done and how much it will cost. On to step 3. Your next step is to go house shopping. You will want to choose a real estate agent to walk you through home prices, neighborhood information, and contracts. You will be tempted to look at sites to determine home values. Keep in mind the values you see on sites will be off by about 8% nationally. An experienced realtor with a good understanding of the local market will have a sense about which homes may be negotiated down to a price you can afford. There are only 2 ways to get accurate pricing, up-to-date information, and all the agent-listed inventory is in a given market via the MLS, only accessible to licensed dues-paying members, or a website operated by a realtor that carries the MLS feed. Step 4. While you are shopping, your loan will then be sent for loan processing and underwriting. The loan processor will gather documentation for the loan file and assemble an orderly and completed package for the underwriter. They'll order the property documents as well, such as the appraisal, title search, and verifications as needed. The underwriter will evaluate all the documentations prepared in the loan package. Underwriters review the credit, the collateral, and your information. The underwriter will cross-check to see if you and the property match the eligibility requirements of the loan product for which you applied. They will issue an initial approval and request additional documents based on their review of what they see and need to support the application. This may even include updating documentation you've already provided, such as updated pay stubs, updated bank statements, or other items. Once you have the approval, this is typically the stage you look at locking your loan. The mortgage loan specialist will look at the current rates and discuss when the right time would be to make this commitment. Interest rates trade up and down every day that bond markets are open for business. Your loan processor will be in communication with you to gather any additional information needed as items are received and once the underwriter has reviewed your initial approval. Once all is received, the loan processor will send back to the underwriter for a final approval. Step 5. Once final approval or clear to close is done, a closing disclosure is generated for signatures. This confirms your closing costs originally disclosed in your loan estimate. The two should match pretty closely. There are laws preventing these costs to differ too much, but the cost can change slightly. It is good to review and ask any questions you may need to in order to feel comfortable with the cost. The closing disclosure starts the 3-day clock. You have the right to review the closing disclosure 3 days prior to the closing. At this stage, you're almost to home plate. Most times, everything goes as planned, but small changes can occur after the initial closing disclosure is signed. These changes will be minor, such as typos or extensions of closings due to property not completed and other unexpected issues that may come up. You'll be going through your final walkthrough of the property at this point. You can make sure the seller has vacated the property and any contractually stipulated repairs have been completed. These are all things that may be the point of an unexpected issue. So then we're down to step 6. Once we have a clear to close, meaning all conditions have been met based on the underwriter review of your loan, you can schedule your closing to happen after the 3-day wait period from the date you signed your closing disclosure. You will need to talk to your mortgage loan specialist and your title escrow officer on how to transfer the closing costs for closing. This is usually a cashier's check or a wire transfer. You will plan to bring your driver's license or passport and your checkbook to cover any minor differences to your closing costs. Once you have read all documents, you've asked questions and asked for any forms with blank lines or spaces to be completed, you are free to take the keys and enjoy your new home. Most of these steps are happening simultaneous. My best advice to you is to alert your mortgage loan specialist when you have gone under contract for a home immediately and respond to emails and calls as quickly as possible. Remember, the more you delay sending needed items could cause your closing to delay. Thank you for your time. And again, my name is Lisa Barrientos with Elite Financing Group, and thank you for allowing me to share my knowledge.